Welcome to an FX technical stream on the last day of the week, Friday 9th of October, and we're going to be covering a few things and really going to be looking at what we're looking at the beginning of the week when we did the FX stream, and namely we were looking at the emerging markets and the potential risk themes in development. We'll be looking at the FX space, both in the majors and the emerging market side. We'll be looking at a few of the peripheral spreads as well as the commodities. So this chart over here, firstly, we can see is the rebasing chart that's set back from yesterday, so from the FOMC during the overnight Asian session and this European section, and you can see over here this is all outperformance against the US dollar. So this is starting everything at a base of 100, and anything above this line shows outperformance against the US dollar. So we've got over here, we have the Australian dollar, we have the New Zealand dollar, we have also the Euro FX and the Canadian dollar. So broad dollar weakness, but then we have the Japanese yen that's underperforming as risk-on themes have really been gripping the markets for the last 24 hours. So those are what's happened really after the FOMC during the Asian session and this morning's European session. So we see the Japanese yen is the underperformer as people start taking risk on the table. Now, what we're looking at right at the beginning of the week were the emerging markets, if those who are watching the stream can recall. So let's just click over here to the emerging markets and we'll go through the ones that we're looking at specifically. First, the Turkish lira. Now the Turkish lira, we're looking at this key level over here, this 297, and we're saying potential double top formation that we had formed over here, and any breach of this neckline at the 297 would see a move down towards this little swing low over here, around the 290 area. So that was your first measure of potential risk on, and the reason why we like the Turkish lira the most, simply on the emerging market side, is because it could hardly take out this previous swing high when it went a little bit higher over there. So that was your first chart that we're looking at the beginning of the week, and I think we're trading, what's here, this is Friday, Thursday, Wednesday, Tuesday, Monday. So we were looking at over here as a potential double top formation as we're trying to judge what risk trends would start doing, as we saw that the emerging markets started recovering along with the commodity prices. So that's the first objective on that, a double top formation that was met. Now if we go look at another emerging market, we'll look at the South African rand, and same story. So firstly we had this failure above the 14 level. So if you see over here above this 14 level, we put in some candles above there, failed over there, and then the path of least resistance, I think the rand was trading here at the beginning of the week. We're looking for this to be retested, and again, if you're trading any peripheral markets, and remember the risk theme for the last couple of months, as reiterated by the all the major developed central banks, the risk themes were the emerging markets. So the emerging markets, we're keeping a close eye as this had systemic risk influence, and therefore we really wanted to, if we're trading core European equity indices or core US indices or core bond futures and US futures, we wanted to keep a very close eye on these potential failures of the currency in the emerging market starting to get stronger again. So that was the South African rand for you. And now if we look again at the Mexican peso, same story. The Mexican peso, we're more or less trading around over here. We had this potential hammer of death that we were talking about on the Mexican peso. This being the hammer of death over here, if you can see. So we've got this wick with this body over here, and the market failing to trade any higher. So any trade below that low of the so-called hammer of death would see a move back towards the downside, and retesting this previous swing low and this previous hammer candlestick pattern over there. So that's your Mexican peso. So again, if you can really follow me with this, what we're trying to establish here, as an intraday trader that we are at a few takes, is understanding the relationships in other markets. And when you start seeing the right technical structures in your market and the correlation starting to add up, then it gives you a bit of extra conviction in executing your trades as you see flows going back into risk into risk assets. So that again is your that's your Mexican peso. And then finally we'll look at the Brazilian real, just to this is our basket of the emerging market side. We're looking at the beginning of this week, we're keeping an eye on this trend line over here. If you can just follow this trend line, and we breached this trend line, and we knew we had some support over here, and when we breached this trend line, you can see here, we put a close below this trend line. We came back with a wick, retested this area over here, retested this trend line, and then we've sold off, and now we've coming to test this, sorry for the skew line, we've come to test this line over here. So that's really where we're at now in the emerging market side. Quite a few of them are coming near like important swing lows as we look at the at a few of the things. You can see the Turkish lira is coming at this level here, the South African rand near the 1320, and the Mexican peso near this swing low. So all of them are approaching some key swing lows and swing areas that you want to keep an eye on. This really drove risk themes. And if I show you something else that we were talking about at the beginning of the week, were the seasonal trends in the equity markets. I'm talking about that I've got here is a DAX futures seasonal chart, compliments from Dimitri Speck, the DAX futures for the last 16 years, and you can see, and I'll cover this a little bit briefly in my technical stream at 2 o'clock, but as you can see over here, you can see pretty much beginning part of October over the last 16 years, pretty flat bound, and then we just start having the Santa Claus rally, as you can see, and pretty much a move of in excess of about 7% on average over the last 16 years. From October till December, you get these so-called seasonal trend or Santa Claus rally in the equity markets. And this is not just in the DAX. You can see it in the FTSE, you can see it in the US indices, some other of the European indices, as the VIX index also becomes a little bit more compressed. So that is your seasonal plays, and on the back of that you had some really interesting emerging market patterns which resulted in potential risk on theme for this week because of the technical landscape and the technical structure that you had in many of these currencies. And then on top of that, with regards to emerging markets, really starting to perform a little better, the commodity complex started improving. And one of the things we also looked at the beginning of the week was the New Zealand dollar. This is the New Zealand dollar over here, this orange line over here, these orange brownish bars over here, and you can see we breached that level we're talking about at the beginning of the week, and if we breach that level, the next level we're literally trading at the moment, traded towards the upside. And this is the reason why there was a little bit more conviction towards the long side of the New Zealand dollar, at least profit profit taking after this significant down move, was what we had, the milk prices in New Zealand starting to increase. And the milk prices, remember, one of their main export commodities in New Zealand, and given the price of milk will determine how much farmers are paid out, and therefore contributing towards the GDP of the New Zealand economy. So there's recovery in milk prices, and as a result this week in the New Zealand dollar we've had some really strong performance, especially over this week we've just had. And it's a little bit more clearer if we go and I just show you over here. This is a New Zealand dollar over here, and let me just show you So this is what we've done literally on the week. After putting that little base down here, we broke back into this previous range, and the path of least resistance was towards the 67 figure, these highs over here. So that was a strength on the back of milk prices also increasing a couple of weeks before that. We've also had, again, in the commodity currencies, the commodities start recovering in both gold, oil, gold, iron ore. You've had the Australian dollar really take out this previous peak over here, and we've also had a very strong move. And this is on the week, so we look at the weekly performance of the Australian dollar. You can see quite handsomely we've put in some really strong performance on the week, as again goes into what we were talking about at the beginning of Monday, those technical structures on the emerging market side. And we're talking about, I'm not really talking about many trade setups. We spoke about those at the beginning of the week on Monday, and trades that we're looking at in the emerging market side. So this is just really recapping, more or less recapping on the week. So if we go back to the commodities side, so that's a New Zealand dollar. We've looked at the Australian dollar. High grade copper this week as China starts to recover. We've also had a strong daily move in copper. Potential double bottom formation developing in the copper complex. You can see over here, first bottom. Now we're in the development of the second bottom, where the neckline comes in at the nice psychological level of 2.5 over here. So potential double bottom in formation in high grade copper, after we've really been offered in the commodity complex for good couple of years now, and now we're trying to see if we can recover of this 220 base in copper. So these things are quite important going forward, also for bonds, which we'll look at this afternoon, as commodities slowly start recovering. And then finally looking at the gold market. Gold's approaching some key levels at the 1160 area. What we have potentially over here is a Peter Brunt pattern, and it's called the Horn Formation. Peter Brunt, one of my favorite technicians in the marketplace. Worth reading his book. He's a classic chartist. He has been trading for a good 50 years. I think his worst down year was 8%, average of about in excess of 40% per year compounded, and 600% his best year. So one of the great veterans of the market, especially from a charting perspective. And one of his patterns that we actually had in the Bund in the beginning of the week that I'll look at in our technical stream later on is it's not a classic horn formation, but what a horn formation looks like. So you have the first probe up, and then what you have is a lower low and another second probe up that sometimes takes out the previous high, and then you have another probe up, and then once it takes out the second high, then you get the development of quite a powerful trend. So that's a Peter Brunt formation. So over here in gold, you have what you probe up here, then you've got a lower one over here. So it's not quite a textbook horn pattern, but once we take out this high, then this could really start getting things going. So keeping a very close eye. I mean, this is critical resistance in gold, this 1168, that we're keeping a very close eye. You can see this whole area was a sideways consolidation for a good 4 months before we broke down towards the downside, and then now we try, so this to me is really the dividing line for the gold bears. They have to protect this area. Failure to protect this critical area, and we start trading up there, well, then we can really start seeing moves towards the upside and challenging that 1230 area. So that is your gold market for you. Now, I think that's it that I wanted to look at in the commodity complex. But if we look, is there any else? Crude futures now. Now, Crude Futures, I actually posted a tweet about 2 weeks, I don't know, about a week ago, of the seasonal trends that actually show crude offering down from October. Well, we've had the complete reverse. Now, seasonal trends of 30 years. So we never broke that 44 handle. This was quite tricky. After we posted this inverted, range bound kind of shooting star. It's not a textbook shooting star. It's not on the top of a trend, but we've now really traded back out, and now we're trying to trade up, and so it's debunking those seasonal trends, those 30-year seasonal trends, as the commodities across the space start getting stronger. But one thing that did look at good 2 months ago was this pattern where the low that was made in 1987 at the beginning of the year then made another low in August in 1987, and followed that low in August of 1987. We had a phenomenal, we had a proper correction in oil market. We're talking about the analog to 1986-87. So 1987, I think it's the year 1987, where we made a low more or less made a low in March, and then the next low was made again in August, which is exactly replicates. I mean, this, if you go look at your 1987 oil charts, literally this replicates, and this low over here in 1987 and this low over here in 1987 were both made in March and August. So 1987 we had a low in March after a significant sell-off. So we had a tremendous sell-off from I think like $35 a barrel all the way down to around, I think it was 11 or 10 dollars a barrel. Made the low in March, and then we jumped up like we did in 2015, and then we sold back down in August, and then we started rallying up. So that's a common, that's a pattern, an analog to 1987. And what also happened in 1987, you had, following, I think, a year later, after this low was made, a year later, the PCE numbers started increasing, and thus the Fed started hiking rates again. So possible to really take that picture, really important picture of oil back in 1987, and see the repercussions of inflation and the interest rate environment back towards that period. Okay, so that's the FX stream for today. I'm back on again at 2 o'clock today for the technical stream of the bunds and euro stocks, as well as the S&P 500. We'll be looking at some of the profile structures, and we're talking about a couple of trades that traders took on the past 24 to 48 hours. So I want to discuss what traders were doing, and to a little bit more interactive on that side. Okay, all the best for this afternoon's trading, and I'll see you back at 2 o'clock. This is Alex for Futex Live.